This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil, and I'm going to give you a stock market update for Friday morning. And we're going to start with the market conditions and then run through the individual timeframes, looking at trend, momentum, MACD, ADX, and doing that in multiple time frames. So the goal here is to try and use the S&P to help you understand how to go about doing analysis on an individual stock or a sector or any kind of market. So I like to do this on Fridays because I think it gives us a pretty good sense of where the market is. So we're getting some analysis in, but at the same time, it's all about the process and learning the process and how it dovetails into the course that I put out. If you're interested in learning more about ADX and MACD in multiple timeframes and how it relates to price in multiple timeframes, I am making my book available. Now, my book is on Amazon, but my book I'm making available for $5.99 at a discount through a PDF and ebook form. So if you have an interest, you can go to rabilstockresearch.com/book. I've put in the description below, I have put the link. All right, let's go ahead and take a look at the market conditions. And we've got this sentiment right now at 26% is the difference between the bulls and the bears. Now, the key thing here is that this was around 39% up at the peak here. It got up to 39%. That's pretty high. I mean, once you get over 40, you start to get a little concerned. Anything in the mid to high 30s is a little bit of a warning signal. The number of bulls is at 44 now. It was probably up around 55, 56, 57 again 2 weeks ago, and that has come down, but it somewhat grudgingly. It's not dropping real fast. And during this period, actually, even though the number of bulls has dropped down faster, we have actually lost some bears too. So it's not like a bunch of people are getting really bearish and this is getting ready for a new buy signal. What I've been thinking, especially when I go through and look at the individual stocks and you go and you look at as many stocks as I do on a regular basis, you see that there's some damage being done to the short-term patterns, just like what's happening here on the daily chart of the S&P. There's just a lot of stocks that are kind of coming in a little too hard. It just makes me think it's going to take a little bit of time to get things going. But I wanted to make sure I covered the fact that the overbought has worked off this divergence, right? We had a divergence in the RSI 5. It's come down to 40. I would no longer consider it overbought. I wouldn't, consider it a big negative anymore. It's more of a neutral. It hasn't reached what I would consider to be a positive. If it got oversold in this condition, if we were hitting the 18-week here and we got this down to maybe the difference between, the bulls and the bears down to about 20, and this was down to oversold, then we'd reverse right back into a buy signal. Right? But we don't really have that in place. So those are neutral right now, and they're actually still working off of the sell signal that took place off the high. All right, now look at what's going on with the volatility. This is still incredibly negative. You see how this went to another new high here? You see the size of this bar? So it's all about the size of each individual bar, including the gaps. So you'd fill in these gaps and that'll tell you what the average true range is. And that is growing. And when it's growing, there's more risk involved. Now, we haven't seen any real increase in the volatility of the weekly bars yet. All right. Now, so what that's telling me is the odds of a big drop off the weekly, where we just go right through all this and just drop, is really, really small. But it doesn't mean that we can't continue to do what we're doing on the daily and have it sort of develop into that on the weekly. It's just we're probably going to get some kind of a drop if that happens, and then a rally back up, and then a move back. And this will be turning back to the upside through that whole period, just like what happened here. So we want to be on the lookout for that, but it isn't there yet. So we have to sort of assume that there's pretty decent support underneath. All right. Nothing really changed in the trend and momentum. We still have the weekly trend is positive and the momentum is positive, and the other two time frames are neutral. All right, so I wanted to just make sure I covered that. Now let's go and take a hard look at the different time frames. And one of the things I want to show you this week is and explain something is how important the 18 is in each time frame. So here's the 18 MA on the monthly. All right. Now, if you notice, if I zero in on this, where this crossed was May, okay? That was May, where it crossed the 18 and closed above. Now, if we go and look at the 1, 2, 3 on the weekly, we had a downtrend break. We came back and tested, and then we came back up through in May, okay? So we complete the 1, 2, 3 simultaneously with the cross of the 18 on that time frame, on the higher time frame. All right, so it's a good confirmation tool, something that you want to be on the lookout for. Now, while we're on the monthly and the weekly, and before I go down to the smaller time frames, let's just say, look, this is not a powerful looking trend. It's more of a consolidation pattern when you look at the ADX. Yes, this has shown signs of improvement here, and it's telling me that, you know, there should be pretty good support underneath if we do get some kind of a pullback. But it's not really bullish right now. This is going to have to form a pinch to set up a bullish setup. It's going to form something bullish. This is going to need to hold during a pullback, and then all of a sudden we have a setup on this time frame that looks a little bit more attractive. And green DI has been moving up. It hasn't crossed above 25, but it has been moving up. But we need a setup to develop here. Right now, I just consider it a rally into resistance. That's really how I would view this. Bullishly done it. It's bullishly done it based on the MACD. It's improved the bias, but it hasn't really set itself up yet. All right, if we look at the weekly momentum, it's actually really good. And this is very strong confirmation to the upside, confirmation to the to the upside here. Both MACD and ADX confirmed on the way up. What's a little disturbing is the fact that we have now come back down this week, and we're getting back down through the signal line this week. All right, now it hasn't closed that way. If we had a huge update on Friday, then this is possible it won't close below, but I think it will. And if that's the case, you've built in a little bit of resistance up here. You've kind of shifted the bias a little bit. Not enough to call it negative because there's no divergence or anything. But what that tells me is that if we try and rally here, it's probably going to run into a little resistance, kind of like what happened today. I mean, look, in case anyone's wondering, today the market opened up. It looked like the NASDAQ was going to be up massive. NVIDIA was up huge. It ended up closing like break even. A lot of stocks that were up, really gave it back. The XLK, which is the technology sector, got killed today. It was down 2.3%. So when you see that, you kind of have to be thinking, and even the XLY, which is a consumer discretionary, was down 2%. So, and then you go to XLC. Those have been kind of like the three stronger areas. XLC is communications, is that was down 1.92. Those were the three biggest areas that got hit today. And those were kind of the leaders on the way up. All right, so we've got a lot of these big cap names, mega cap stocks that are correcting, and it looks like they want to keep correcting. So I wanted to make sure I added that in. All right, so we've got that. Now, let's look at the reference here. This is really cool. So this is the cross of the 1, 2, 3, and it simultaneously meets up with that cross of the 18. So it's a good way to check and see. If you're doing a 1, 2, 3, if you have a 1, 2, 3, that's showing up here and you go to the higher time frame and it is nowhere near the 18, like if it's way below or if it's way above, then you missed something. You might have missed a trend line. If it's way above, like if it's already way up here, then you probably missed a trend line somewhere. It's just a good way to check. Now, most of the time you get they won't happen simultaneous like that. It'll happen, but within reason. It'll be usually, like in this case, it'll be in the same month, right? I mean, it happened at the same time. But when we start to go and look at what's going on now, let's look at the daily first. So we're sitting on the weekly line. See this weekly line? We're sitting on the 18-week, and look at what's taken place. We broke the trend line, and we rallied up to the 18, basically got pretty close to the 18. It's a good enough to be considered a 2. I usually say it has to be a 33%, 38% retracement or whatever. It hit almost 50%. It was right in between the you see that it's like halfway between the 38% and the 50%. So pretty close to perfect there. But here's the key thing. Now, if you come down and you break the 3, okay, you have now broken the 18 week. You see how that coincides? It's almost exactly what happened with the monthly and the 1, 2, 3 to the upside on the weekly. You see how that works together? So we want to know this so we can know how important the 18 is in each time frame. Typically, a break of the 18 in one time frame actually means the lower time frame is changing its trend. Because if you notice, like I don't have the when this switches to the upside, that doesn't mean the monthly is turning positive. Just because we cross above the 18 doesn't mean the trend is positive anymore. Okay, I mean, doesn't automatically switch it to positive. It's this time frame that's switching to positive. That's where we're above 2 rising moving averages and all that. That's where that's kicking in. Now, if we come down here and we break this, now we're going to be below these 2 moving averages. We're going to have a confirmed down. We're going to have, well, I don't know if I call it confirmed, but I would call it a bear trend. All right. In reality, if you're going to go letter of the law, we need one more lower high and one more lower low. But when I am below a moving average, the 18 and the 18 and the 40 are both declining like that in unison and the price is below, I pretty much consider that a downtrend. All right. You notice the overrun we got here. So that tells me that even if this holds, let's say we don't come down and take this out. Let's say we just come down and hold this. Then it could turn back up and come back up through here, but it's probably going to take a little bit of time. Now, here's the key. Look at what happened on the hourly chart. We broke the downtrend line, and now we pulled back, and we're forming the 2 right now. Well, here's the 3. If we come up and take that out, what's going to happen? We're going to take out the 18 on the daily. Hope you can see that. I should be zooming in on these so you can really see. So if we work up, back up, and take out this high, we're going to take out this high. Well, that's going to be taking out the 18 on this time frame. This is the whole reason why I don't predict. There's no reason to predict. All you have to do is really good analysis, know what you're doing, know that if we take out this low, then we're probably taking out the 18. If we take out the 18 with the MACD coming down here, then we're running the risk of maybe coming back and testing this breakout area. It's also possible we're going to work our way down to the next 18 on this time frame. And then we have to see and watch and see what happens with MACD on this time frame, right? I mean, so you keep working your time frames. Right now, we just essentially gave a pinch play sell signal today on the daily chart. Now, that doesn't necessarily mean we're starting some big downtrend. A simple pinch play is really just worth 2 to 4 days. And this was a big day, so it doesn't necessarily mean you're going to have 4 days like that, right? I mean, so we know we've got a little bit of a downward bias, but you could also look at the ADX on this time frame on the daily and say, wow, that's really good ADX, and this is not a lot of strength in the sellers yet. So we could easily come down, even undercut this slightly, and then turn back up and come back up through here. And you'd have to have respect for that because we'd have a 1, 2, 3 developing on this time frame. So keep your time frame straight. Focus on this 18 in each time frame, and I think this is going to be really helpful in helping you determine, in terms of where we are and how important this correction is and how long it's going to go. All right. Let me know if you have any questions or comments.